Hello dear student, here I am going to start our new semester, that is third semester. I already gives you about your subject and syllabus. Now I am going to take financial management subject. Okay students, let's start our class. Our first chapter is Introduction of Financial Management. It includes meaning or introduction of financial management, nature of financial management, functions, objectives, functions of financial manager, etc. These are the topic included in our first chapter. Okay, let's start our class. First part is introduction or meaning of financial management. Okay, before going to know financial management, we want to know about finance and management. Okay, what is finance? Finance is the word derived from French word that means fine, which means to pay, settle or finish. Finance is the provision of money at the time when it is required. We know that every enterprise, whether it is small, medium, or big, needs finance to carry on its operation to achieve its objectives. Without adequate finance, the enterprise cannot accomplish its objectives. So, we know that finance is very important in every business organization. Simply, we can means finance is the management of money and it include raising of finance, providing and managing capital fund, etc. Okay, we have the definition. What is finance is the activity concerned with the planning, raising, controlling and administering of fund used in business. Once again, finance is the activity concerned with planning, raising, controlling and administering of fund used in business. Okay, the next part is functions or areas of finance. There are mainly four functions. First one, investment decision. Second one, financing decision. Third one, dividend decision. The last one, liquidity decision. Let me introduce one by one. The first one is investment decision. What is investment decision? Here, investment decision determines the total amount of asset to be held in the firm. It helps the organization to invest profitable project and asset. There are two type of investment decision. One is long-term investment decision and next is short-term investment decision. Long-term investment decision is also called capital budgeting decision. And short-term investment is also known as working capital management decision. Under long-term investment or capital budgeting decision, the benefit of which are expected to be received over a long period of time, exceeding 1 year. The investment proposal should be evaluated in terms of expected profitability, cost, and risk involved with that project. Under short-term investment decision, the allocation of fund among cash equivalents, receivables, and inventories. It gives the decision about liquidity and profitability of a trade. It is the fund for short period in the organization. Okay. The next function is financing decision. After making the decision about investment decision, the next step is financing decision. Your financial manager has to select sources of fund and raise finance for profitable project proposal. Okay, it gives the information about the capital structure of a business. It gives the information about capital structure of a business. The manager tried to make optimum capital structure in the business organization. If the capital structure is able to minimize the risk and raise the profitability and maximize the wealth of the shareholders, such capital structure or mix of capital is optimized capital structure. So the finance decision is selection of adequate mix of capital. Okay, the next function is dividend decision. It relates the disbursement of profit back to the investors who is supplied capital to the firm. It involves the decision regarding distribution of dividend to the shareholders. Okay, the last function is liquidity decision. It means management of current asset. It is also known as working capital management decision. Under liquidity decision, the manager tries to allocate the finance for day-to-day financial requirements in the business organization. Okay, students, these are the important functions included in the finance. Our next topic of financial management. What is financial management? Okay, financial management is the management of finance in the business organization. Management of finance in the business organization. It includes two terms, finance and management. Finance is the money available to the firm, and management is the planning, organizing, directing, and controlling financial activities in the business organization. Mainly, financial management includes raising of money, spending of money in the business organization. Raising of money and spending of money. Okay, financial management includes mainly three activities. First one is anticipating the financial needs. The second one is acquiring financial resources. And third one is allocating funds in business. Okay, students, simply we can means that financial management is the process of planning, controlling financial resources in the business organization. Okay, students, hope you understood the term financial management. Okay, our next topic is nature of financial management or importance needs of financial management. The first one is management of money. What is management of money? It means it deals with the problems of money in or finance in business organization. Second one is financial planning and control. Financial management is concerned with the planning and control of finance. Third one is determination of business success. Today, finance is a key to success. Financial manager plays a very important role in the success of every business organization. Next one is focus on decision making. It gives analysis of data which facilitate decision making. In financial management, the focus is on financial decision making. Okay. The next one, centralized in nature. Unlike other functional area like production, marketing, financial management is centralized in nature. In finance function, decentralized is not practicable. Okay. The next one is multidisciplinary. It means financial management relates to different kinds of discipline such as economics, accounting, marketing, production, etc. Next one is coordination of functional activities. I already tell you it is a multidisciplinary. The financial manager try to coordinate all functional activities in the business organization. The last one is solution to financial problem. In every business organization, the financial manager tried to make a solution for finance related problems. These are the important feature or nature needs of financial management. Okay, students, the next part is objectives or goals of financial management. The objectives can be broadly classified into two. The first one is financial objectives and the second one is non-financial objectives. Okay, let's see the financial objectives. There are three subcategorization of financial objectives. First one is profit maximization, second wealth maximization, and third value maximization. What is profit maximization? Profit earning is the main aim of every business organization. No business can survive without earning profit. Okay, profit is a measure of efficiency and serve as a protection against risk in the business organization. Thus, every business organization always try to make higher profit in the business and at minimum cost. Here the objective is earn more profit. And the second one is the second next financial object is wealth maximization. If the firm maximizes the shareholders' wealth, the individual stakeholder can use its wealth to maximize its individual utility. Maximum utility refers maximum stockholders' wealth. That refers maximum current stock price per share. However, the maximization of market price of the share should be in the long run. Okay. The next objective is value maximization. It is a long-term market value of the organization. Here the financial management try to increase the value of a firm in long run. Okay, these are the financial objectives. Coming to next, that is non-financial management. The first one is enhance the employee satisfaction and welfare. What is that? It gives the information about the employees satisfaction level to the business organization. That include promotion of employees, rewarding to employees, etc. That will help to enhance the employee satisfaction and welfare. Okay, the next thing is enhance management satisfaction. That means managers are the people who actually meet all the objectives of the company. The shareholders simply sit outside, but the manager carry out the functions of business. So the maximize it is very important to maximize the management satisfaction. It's a very important role. The next one is promote well-being or well-being to promote well-being of society. That means a company is a part of the society. Okay, hence the financial management cannot ignore the society. And it will include different kinds of values to a company to patient, customers, colleagues, investors. There are different kinds of outside persons related to business organization. Okay, so it will promote well-being of society. Then last one is provide quality service to customers. Some companies state that their objective is to render quality service to the customers. By rendering quality service, it is possible to delight the customers. Okay, it would help the sustain and the existing customers and create new customers. These are the main objectives of financial management. There are two types: financial objectives and non-financial objectives. In financial objectives, profit maximization, wealth maximization, and value maximization. Non-financial objectives: enhance employee satisfaction and welfare, enhance management satisfaction, promote well-being of society, provide quality service to customers. Okay, students. The next one is difference between profit maximization and wealth maximization. There are some difference. What are they? In profit maximization, it is the short-term objectives, but wealth maximization is long-term objectives. Profit maximization aims to maximize profit. Wealth maximization aims to maximize wealth. And under profit maximization, it measuring effectiveness of business organization. And in profit maximization not consider the time value of money, but wealth maximization consider the time value of money because it is long run. The next one is under profit maximization it ignores society. Under wealth maximization it considers society. And profit maximization is the traditional approach, and wealth maximization is modern approach. Under profit maximization, they ignore risk factors. Under wealth maximization, they consider risk factors. These are the difference between profit maximization and wealth maximization. Okay. Next, students, we have the next topic, that is functions, the role of financial management. Role of financial manager. Okay. First one is financial forecasting and planning. Financial forecasting and planning. The first function of every business organization in the financial manager is to forecast the financial needs of the concern. It is necessary to estimate both the short-term and long-term financial requirements. The next one is procurement of fund. That means acquiring of fund. After making financial planning, the next step will be acquiring of fund. The finance executives or manager has to select the best source of fund. Then next one, investment decision. I already stated the investment decision. The financial executives or managers will have to decide how much fund will be invested in fixed asset and how much funds in current asset. It is the duty of financial executives to establish a sound asset management policy. Okay, the next one is management of income, that is dividend to shareholders. That include, this is one of the main function of finance executives. He has to decide how much to pay dividend to shareholders and how much to distribute as bonus to employees and how much to retain the future out of profit earned after tax. Okay, the next function is management of cash. This is the another important functions of financial manager, that is they were estimating and controlling cash flow in the organization. The financial manager should see that adequate supply of cash is available at a proper time and a smooth running of the business. Okay, this is the management of cash. The next one, analyzing financial performance. The financial manager is required to analyze and check, appraise the financial performance. Okay, the next one is advising the top management. That means this is another important functions of financial manager is to advise top management on all financial matters and suggest various alternative solutions for any financial difficulty. Okay, the next one, coordination and control. This is one of the important function of financial manager. He is responsible for introduction of budgetary control techniques and for installing a system of prompt communication of financial data. Okay, the next one is tax administration. Tax administration means another duty of financial manager. It helps to tax administration and tax planning. Next one is risk management. It is very important function of financial manager that understand the risk management of the business. He needs to evaluate the risk of business faces, and he should manage these risk of eliminate the risk, reduce the risk, and avoid the risk in the business organization. The next one is record keeping and reporting. Keep all detailed information about finance. The last one is preparation of financial management. There are different kinds of financial statement is there. The first one is profit and loss account, balance sheet, etc. This is the another preparation of financial statement is the another important functions of financial manager. These are the functions of financial manager. Okay, clear? The next one is controller and treasurer. Controller and treasurer. Okay, controller and treasurer are the two subordinate officer of financial manager. Okay, controller and treasurer are the two subordinate officers of finance manager. Okay, and controller is the control the functions of finance in the organization, and the treasurer is the chief custodian of fund of the business organization. Okay, control is the function of control, treasurer are the functions of finance. They were the two subordinate officers of financial manager. Okay, students, the next one is the legal environment for financial decision. Legal environment for financial decision. It includes regulatory framework in countries, different kinds of policies, the rules and regulations of government, that means act, procedures, etc. Then various policies of government that include credit policy, tax policy, industrial policy, monetary policy, etc. Then institutional framework, nature of business, size of business, source of business, etc. The last one, SEBI guidelines, procedures, rules, regulation of SEBI. These are the legal environment for financial decisions. The next one is operating environment, that include economic condition or system of environment, then degree of competition, then globalization, that means new challenges, opportunity in the market, the level of risk, certainty of risk, the nature and size of business. The last, liquidity position, that means fund available for day-to-day operations in the organization. These are the operating environment for decision making. The last one is tax environment. It includes tax related terms, that is taxation rules, tax system, tax structure, etc. It is very essential for financial decisions. Okay, students, hope you all are understood what I take here. Financial management, objectives or functions, different kinds of functions is there, and financial manager, duties of financial manager, then legal and operating and tax environmental analysis for decision making. So all topics are here I've discussed. If you any doubt, please contact me. Okay, thank you very much.